Very good evening to all of you. It's a great privilege for me to welcome Mr. Gyanchand Mishra ji, the Vice Chairman of IASB, CPE, and CMA committee and member of approximately 23 committees. This Gyanchand Mishra, sir. Very good evening, you, sir. Welcome, sir.
Good evening, madam. Ritu, how are you?
I'm very much fine, sir. It's a great honor for me to welcome you on this stage, sir. Thank you so much, sir.
Thank you, madam.
Thank you.
Hello.
Hello, sir.
Should I speak, madam?
Yes, sir. Please continue, sir. Please continue, sir.
Thank you, moderator of the session, Ritu, madam. Highly respected chairman of Internal Audit Standard Board, very dynamic and visionary leader of the profession, CA Charan Singh Nandaji. Today's speaker on the session, Daftari madam, and of course the host branch, Jammu and Kashmir branch, all the officers of the institute, and of course all the attendants who have attended this very wonderful event. That's a series of event being going on. That is future of internal audit, smart and digital internal audit. This is global trends internal audit. A look ahead. This is a series being going on, and this time Jammu and Kashmir branch has hosted it. I congratulate to the branch and compliment them for hosting such a wonderful program of internal audit standard board. Friends, we all are aware that is taking the pivot role, the cost, giving a paving path to the entrepreneurs and to the industries at large. I am quite hopeful that this session is going to beneficial all the participants to conduct the internal audit in digital era, as well as to understand the value and systems, as well as in, internal control procedures to be followed for the conducting the internal audit. I am thankful to the board officers for giving this opportunity to interact with the member. And I am very much thankful to C. Charan Singh Nandaji, who is always kind enough for me to guide and mentor in the board's activities. Thank you, each and everyone, for patient listening to me. Thank you once again.
Thank you so much, sir. Thank you once again. Now I welcome Mr. Nakul Saraf, the chairman of the Jammu and Kashmir branch. Welcome, sir.
Thank you, ma'am. Good evening, ladies and gentlemen. I'm glad and in fact honored to be a part of this event where we shall be learning about various aspects related to internal audit through the eminent speakers for today's program, CA Rachna Daftariji, CA Purav Kalaji, and CA Praveen Kumarji. Welcome all. I would also like to mention that Internal Audit Standard Board, under the chairmanship of our very own CA Charan Singh Nanda sir, along with CA Gyanchand Mishra ji as the vice chairman, is definitely identifying the areas where we all need to update our knowledge and skills. In fact, the internal audit, if we talk about today's topic, global trends in internal audit, the internal audit plays a very critical role in companies' operations and corporate governance, especially now when the Sarbanes-Oxley Act of 2002 holds Sarbanes-Oxley Act of 2002 holds managers legally responsible for the accuracy of the company's financial statement. In fact, over the past few years, internal audit has repositioned itself as an influential function within the company, identifying key risks and taking an advisory note to decision makers. The new importance was highlighted by the events of 2020 between the global COVID-19 pandemic and its effects on the economy, the challenging labor market, the new global leaders, and influential social movement causing disruption to many processes and creating substantial risks. Internal audit is now under greater scrutiny to be able to effectively identify key risks, and guide organizations through the next few years. So without taking much time, now I request Rituji to please move forward and invite our guest.
Thank you so much, Nakulji. Thank you so much. Now, I'm going to introduce here Charan Singh Nandaji. Actually, he is such a prominent personality. There is no need to introduce, but to maintain the decorum of the profession, to maintain the decorum of this platform, we have to introduce Mr. Charan Singh Nandaji. He is the chairman of the Internal Audit Standard Board of the Institute of Chartered Accountants of India. And he was a Central Council member for the term 2019 to 22 of the Institute of Chartered Accountants of India, member and Quality Review Board set up by the Government of India. He was the Vice Chairman of Committee on Public Finance and Government Accounting, was the Chairman of Professional Development Committee of the Institute of Chartered Accountants of India. He was the Chairman of the Committee for Cooperative and NPO sectors, was the Vice Chairman of Research Committee, was the Chairman of Committee on Banking, Insurance and Pensioners, was the Chairman of Committee on Financial Markets and Investor Protection, member of SEBI Advisory Committee on Primary Market for the term 2007 to 2010, again member of SEBI Advisory Committee on Mutual Funds for the term 2007 to 2010, has represented ICAI on SEBI Committee on Disclosure and Accounting Standards, was the convener of the expert group constituted by the Ministry of Corporate Affairs, Government of India on Investor Protection. He was the member of the Southern Asian Federation of Accountant Committee on Professional Accountants in Business. He was the chairman of the committees of NIRC of ICI for a term 2002 to 2003 as an executive member. He was the member of the Career Counseling for the term 1998 to 1999, 2001 to 2002, 2003 to 2004, and many more positions he was occupying in the institute and serving the profession for more than 2 decades. He's such a big personality. Every word is very short of words to honor him. So, sir, I would not like to take much time to be between you and the audience, sir. You are welcome. Welcome, sir. Please address us and enhance our knowledge. Thank you, Charan Singh Nanda, sir. Thank you so much.
Thanks a lot for your kind words, madam. I see here my Honorable Vice Chairman, C.A. Gyan Mishra, who is from Ghaziabad, a person upon whom I can bank upon, a person who is always ready to ensure that day or maybe night he is there for the working of this great institute, the Institute of Chartered Accountants of India. My, you can call, not younger brother, very young to me. His father is my friend, C.A. Nakul Saraf, the chairman of Jammu and Kashmir branch, one of the very technical persons who's very keen to add value to the entire initiative of the institute working. The two revered speakers whom I can see on the dais, Madam Rachna Daftari and C.A. Purav Gala Sahab, who have always been there to ensure that the flag of the Internal Standard Board flies at unprecedented heights. I'm thankful to my secretary Aarti and to Arun Agarwal, who have been instrumental in getting this program coming on air. So, ladies and gentlemen, I would like to give my keynote address. Allow me to just put across my PPT. Give me a second, please. Is my screen visible?
Yes, sir.
Very good, very good. So, ladies and gentlemen, today's virtual CP meeting holds the title Global Trends, Internal Audit, a Look Ahead. So, we are very keen to bring the global trends into India for people in industry as well as practice alike. We want them to work in tandem to ensure that we are able to effectively add value to the entire initiatives of internal audit. All of you are well aware that internal audit essentially is a management perspective, a management function. And therefore, its prime objective is to ensure that whether it is the board or the audit committee that is totally empowered and they are able to work in tandem. Today, we have 3 topics. The first is future of internal audit. smart and digital internal audit. Smart internal audit is the call of the day. The second is identifying red flags and report writing by internal auditors, which is again a very important and pertinent topic. And third is the key challenges in internal audit. Now, ladies and gentlemen, if you speak about the future of internal audit, smart and digital audit, you understand that everything starts from technology. Yes, technologies support analytics and automation in internal audit. We refer it as digital IA, and that has risen significantly, empowering the internal audit community to help the corporates or normal clients to add value. There are certain tools like robotic process automation, which allow the labor-intensive, error-prone process to be accurately conducted, and that to a very short span of time. You're all aware that through analytics, internal audit can not only perform better its traditional duties, but largely can broaden its mandate and sphere of influence so that actionable inputs to management are given, which give a total report of risks and impending opportunities. Both can be taken care by the management. Embracing the power of data, automating mutual processes, and centralizing project management enables internal audit to deliver a more focused audit. We are very keen to ensure that we give the best so that the working is in line with the stakeholders. We have to identify the red flags, and how to write report is very important. First, the tone of interaction is important. A person who's conducting the audit, per se the internal auditor, should have empathy towards the auditees, and he should understand their challenges. Very, very important. You need to understand that internal audit is the third line of defense. It identifies issues and it ultimately flags those issues so that the management can take calculated calls. Focus on process and process improvement, not people. Yes, very important issue. They have to ensure that prevention of issues which are coming every time. The focus has to be on strengthening the process. It cannot address people issues like competency and integrity. An internal audit report, documentation of the issue, what the documentation should have, observations, the auditor's point of view, management response, the auditor's point of view, root cause, why that happened. There has to be consensus on that, and that needs to be percolated to the reader of the report. A recommendation, action plan with time, again consensus between both the auditor and auditee. Risk rating, very, very important, whether it is high, medium, or low. Risk categorization, whether it is strategic, operational, financial reporting, and compliance, very, very important. And root cause categorization, although it is optional, where you have to specify the strategy, structure, process, technology, and people. And second important facet of an internal audit report has scope limitation to be called out. Yes, the agreed scope of work should be documented in the report, and information which has not been received should be called as scope limitation. It has to be there. And when we come to the standard on internal audit, SIA 110, which is the nature of assurance, you have a very clear-cut standard laid down, which says standard on internal audit 110, nature of assurance identifies the objectives of two types of assurance assignments an internal auditor is permitted to perform. The standard refers to the following. Number one, a reasonable assurance assignment, very, very important, and limited assurance assignment. Let me tell you, ladies and gentlemen, these type of assurance, particularly the second one, limited assurance assignment, is probably the first we are doing in this globe. Your institute has done number of things first. Number one, we are the first institute to promulgate forensic accounting standards. First in this world, we are an integral part of IFAC. Yet, with 600 constituent members, your institute, the Institute of Chartered Accountants of India, is the first one to come and give guidance on audit at your specific place. Audit, you call it home audit, you call it work from home. Way back on 30th March 2020, when COVID had barely set in. So limited assurance gives the proper impetus to an auditor where he doesn't get proper documents, doesn't get proper response, he can always issue a limited assurance assignment, a report. And trends, if you look at the trends in internal audit, you'll be happy to notice that like business is changing, the entire audit process is changing. Boards and audit committees are asking and expecting more from their audit. Very important expectation, and meeting that expectation again is a challenge. What are the new challenges? Number one, maintaining a fully staffed internal audit activity with appropriate skill sets, people who can perform. A reporting relationship with senior management and the board. At times, report are not taken in the right earnest. Increased demand for control and financial focused engagements. Very, very important to understand this. Fostering compliance with statutory and regulatory requirements. You have to see the statutory as well as the regulatory requirements and ensure that we move in a compliant fashion. Maintaining a risk-focused audit plan. You are all aware that risk is imminent, but how you have to tackle that risk is something which an auditor advises. And providing consulting services and maintaining objectivity, in fact, and appear also to be objective and independent. So, ladies and gentlemen, I come to the end of my keynote address, but I want to tell you that if you want to succeed as an internal auditor, you have to be guided by a couplet which says, पसीने की स्याही से जो लिखते हैं अपने इरादों को, पसीने की स्याही से जो लिखते हैं अपने इरादों को, उनके मुकद्दर के पन्ने कभी कोरे नहीं होते. People who write their with total impetus, their resolutions, which they come out of hard work, perspiring when they write it, their futures are never blank. They always succeed and create value and worth. So, ladies and gentlemen, I'm truly honored to be here. I'm very happy to be here amongst all of you. And I want to tell you that it's a great honor which invested upon me to give the keynote address. I want to thank you all, particularly the speakers who came here, and Madam Ritu, and my Vice Chairman, Mr. Nakul Saraf, and the entire team who has made this program a great success. We have a number of participants who are joining, and I can tell you by the end of the session, you will be having close than 3,000 members who would have logged in. Over to Madam Ritu for further proceedings. Thank you. Thank you so much.
Thank you so much, Nanda sir, for enhancing the knowledge and considering the importance of internal audit, although operational risks and other hindrances are there, but yes, we need to work hard. And जो पसीने की स्याही से लिखा जाएगा सर, वो तो बस एक इतिहास बनता है और इतिहास पन्नों पे छपता भी है और बार बार गाया भी जाता है सर. Thank you so much, sir. Thank you, जी. Now, my first session, the session first of this global internal audit aspect is relating to internal audit, smart and digital internal audit, which is to be briefed by CA Rachna Daftari ma'am. Welcome, ma'am. We feel very honored to welcome you in this session. Thank you so much, ma'am. Before ma'am will start, I would like to introduce CA Rachna ma'am. Rachna ji is a chartered accountant and has over 16 years of experience in risk-based internal audits, risk assessments, forensic, business consulting, internal control assessments, and internal financial control, SOX, due diligence, etc. She has worked on a large portfolio of clients in various sectors ranging from stock exchange, stock broking, real estate, quick service restaurants, projects, manufacturing, multi-level marketing, trust, wines, etc. Prior to joining Mazars, she worked with Mahajan, Ibarra, AJ Shah, now C&K. The key highlights of Madam Rachna is Rachna ji has conducted fraud risk assessment for hospitality sector and set up the visual mechanism for a lending power company. She leads an assignment for a stock exchange which involved a review of related party, trading and non-trading transactions, default by members, risk management systems, meeting of board and such committees, policy decisions, and some forensic related aspects based on agreed upon procedures covering transactions. She also led a business ethics review for a leading software company in India and has a professional experience in the risk-based internal audit, IFC, ICFR, and Act SOX compliances, standard operating procedures. She led and undertaken IFC designing and testing of all business processes of pharma, food, QSR, manufacturing, etc. in industry clients. Mystery shopping. She has led and undertaken majority shopping assignments for a reputed QSRs, SEBI certifications. She has undertaken review of compliance with SEBI regulations. She did much in her profession. With this, I would like to introduce Rachna ma'am. Rachna ma'am, welcome to you. Please do honor us by having your knowledge and enhancing our knowledge bank. Thank you so much, ma'am.
Thank you. Good evening, everyone. And I would like to thank CA Nandaji, CA Mishra ji, CA Nakul, CA Rituji. Rituji, it was a very, detailed introduction. Thank you very much.
Ma'am, I did cut short.
I guess I should give a smaller CV of mine next time. So I would like to thank IASB to give me an opportunity again. I would like to thank the participants that, even after it being the first match of IPL today, they're still joining and, they're going to listen to us today. Pura, it's an honor to be speaking again with you over here. So thank you very much. So I'll just start without, taking too much time now. Presuming my presentation is visible.
Very much, madam. Please go
ahead. Yes, ma'am. Yes, ma'am. It's very clear.
Sure. So today's topic that I would be speaking about is, the future of internal audit, smart and digital internal audit. That's what we're talking about. And, though I have had an experience in risk-based internal audit, it now needs to move to smart and digital internal audit. We would be talking about it. So let's look at, the internal audit journey to digitalization and automation. So I'm sure all of us can relate to this, a lot of where we all started or where we are probably even partially today. Thanks to the pandemic, a lot of physical records have now been translated into digital records. If you see, what do you see? A lot of paperwork, and we're swamped in paperwork. So, you're literally drowned in the paperwork. There's no work-life balance. It's time-consuming, number crunching. What I'm not actually putting across over here is that if you want to find a document, sometimes you take forever or you may not find a document. Now, what's the journey so far, in terms of digital? So if you see it, it's a fancy picture. What do you see? So it's basically, it needs to be very visionary. Nandaji covered a lot of aspects in his introduction presentation on internal audit. It needs to be efficient and fast. People don't expect, earlier we used to do this, that, we would do an audit and it would take 3-4 months and then you would close the report, it would drag on. Earliest you would give a report after a period closure would be like about 3-4 months down, and people would get really irritated. Now people just want like, okay, tell me after a year or 1.5 years, if you're going to tell me something, how am I going to change anything? It needs to be insightful, insight driven. It can't be just that, so many open purchase orders were there, which are open for more than 2 years. What's the insight in that you're giving? We really need to give more insight into what we're doing, and it is technologically advanced. Nandaji covered a lot of those parts like robotic process automation. We have analytics. I'll speak about some of those technologies or tools in, in the slides which go on. So with entire, technological disruption which is happening, with so many things that are happening, if we as internal auditors do not adopt, the technology, that's where we would be lagging behind. Now let's pause and think. So I'm flashing certain, news articles, items. So there was India's computer emergency response team, which has said that they found there was 11.5 million or over 1 crore cyber attack incidents in 2021. Now, all of this impacts critical infrastructure within the country, like the railways, airlines, power, communication, banking. So some more flashes were on the PNB, ransomware attack, ILNFS, healthcare. Now, what does it mean? That we really need to think. We need to think how can we not be digital? So that's the reason I'm asking you all to pause and think the important. Now, there's so much complexities. It is not the brick and mortar or the, old ways of doing things. There is so much difference in the way the entire environment has changed, the way we are transacting on a simple day-to-day basis. Now, if you go buy something, you don't have your wallet, doesn't matter. You can just do a Google Pay, Paytm, so many other more, Phone Pay, and it's okay. The entire way of doing things has changed so drastically that, we need to pause and, think about what we are going to do. What are the emerging risks globally? Why is it important to look at that? Now, what are the global? One of them is cyber and data security. We already spoke about it in the previous slide. There is regulatory change and compliance, especially after the pandemic, or you could call it the endemic right now. There are so many changes which are happening. There are so many compliances that we need to look at. There's digitalization, new technology, and artificial intelligence, which is being used continuously. If you keep reading articles, you will see that every company would say, there was an article today that, India Infoline won an award on, the best technology or WhatsApp-based loans that they were providing. There's new technology. We need to think about it. There's financial, capital, and liquidity risks. So while some companies or some industries have done extremely well, there are some which are not doing so well. There's human talent. We all know what we're all going through in terms of, the resource challenges. Talent, even if you're getting it, managing and retaining them, creating a succession plan for every single thing. That's also a very big, emerging risk. The next, we all know about the Russia-Ukraine war that is going on. That's creating a lot of hassle across the world. There are disasters which we are continuously saying. They're saying, we're in the last hour of Earth, and we need to really think about what we are going to do. There are natural disasters which are a common parlance these days. In the last 10 years, we must have seen that every single year we see so many natural disasters, and there's a lot of crisis. And what is the response to that? There's macroeconomic and geopolitical uncertainty. There's so much of, that's lesser with the Russia-Ukraine war. There's so much of geopolitical uncertainty that we have. We have supply chain disruptions. We all know how, the chip industry, the overall supply chain is getting impacted. There's stuffing in that. There's outsourcing, because of the crunch. It's not only from outside the country that we're getting outsourcing, but within the country, people want to be light. So they're outsourcing a lot of their, non-core functions. Like you could have payroll, you could have accounts payable, you could have the entire accounts function getting outsourced. There could be a lot of things which get, like the customer care could be outsourced. Now, when you're outsourcing, it could happen that you are dealing with the nth party, you're dealing with which party you don't know. So a classic example could be that, you have an ERP. Now you've bought an ERP, and the ERP service provider has, they are going to keep all your data on a cloud. Now that cloud is definitely, you don't know where that cloud, with whom the ERP consultant has done an agreement with for the cloud services. Now, should something go wrong with the ERP service provider, would you be able to get the data from the, the cloud service provider? Now, that is the type of risk that you're dealing with. Have you thought about the nth party, which you don't know? It's not a third party, it's the nth party, and you are not even party to that. So, that's something that we all need to keep thinking about. Communication, management, and reputation. We are all living in a social media world. Today, one thing can make your reputation great, or it can totally destroy that. In the social media circle, we know how all these things happen, from the smallest thing, it could change how you look at things. So the use of technology will only aid internal auditors to focus on emerging risks and to add value. So because we'll be able to swiftly think about it and add value on that. So what's the transformation from today to tomorrow? So today, what we do is we make an audit plan, and we generally have it for a year or maybe 3 years rolling plan. And we kind of try to stick to it, but it changes. Now, I think 3 or 4 months back, we didn't think there was going to be a Russia-Ukraine war. Now, if your company has a heavy dependence in terms of a raw material, which is, oil-based, you'll have to quickly change in terms of what your audit plan needs to be there. Or you had a vendor, and the vendor went bust, something, can your plan just be that, or it needs to change? So it's a dynamic plan that you need. Today, we generally have a very stringent plan for the year. Work is primarily manual. By manual, I mean Excel based also. It could be ERP based, but not technology based. So when I mean manual, it doesn't really mean we're just writing, about 15 years back, we used to see manual records. And I'm not saying exactly that, but if you're doing it only on Excel or on, some basic ERP, it's considered manual in today's parlance. You're writing lengthy reports, 50-page reports. One, you take so much time to draft it, think about it. And second is it makes no relevance. Who's going to read 50-page reports, 100-page reports? The internal auditors today generally have only audit experience. I'm not talking about everyone, but a lot of us. The frequency generally is like what you do is like a monthly, quarterly, annual, half yearly is what you look at. Skilled man resource is crunch is for real. We all know that. What we've moved to is an online work, hybrid working mode today. I mean, we're never going to be in a complete office mode, whatever we want to say now. Even if we are the, parties with whom we're dealing with may not be in a complete, physical mode. So what is it in terms of tomorrow or as we transition? The responsiveness has to be to disruption, to any changes. It meets the strategic demands also. What I kept looking at internal audit is more on the operational, financial, and the compliances. We need to think about the strategy also, that where we can play a part in. It has to be enabled via data analytics automation. Again, Nandaji spoke a lot about this. We'll speak about this more in the following slides. It has to be concise. It has to be maybe a 5-page report. It has to not only the executive summary, the overall report can be like, if it's visually driven, you've driven your point most of the times. Why do you need to have lengthy reports? The team should possess not only audit skills, but they need to understand business. They need to understand technology. They need to understand data analytics. There's a term called purple workforce. What a purple workforce is that they have multiple skills. So like we've always traditionally heard of people, doing IIT, MBA from IIM after they've done IIT. They're basically purple workforce. That's a very crude way of saying things, but as chartered accountants also today, once you do CA, that's just like your GP designation. You will have to do more courses like, the forensic accounting one, like Nandaji said. There are so many other courses which are coming up. You should keep enhancing your skills. There are a lot of data analytics and technology related, trainings which go on, certifications which happen. You should adapt that and use that. And that can be used at very small clients as well. Continuous real-time auditing is also an absolute reality and important. We'll again talk about it more in the following slides. So what are the advantages according to you of smart and digital internal audit? I'll let you think for 10 seconds, then I'll flash all the things. Okay. So of course, there is increased efficiency once you have a digital audit. Issues can be tracked on almost a real-time basis. Then you have, you will overall have reduced time frame. It would assist in risk assessment. There is more structured and agile audit planning. What do I mean by agile audit planning is that you can do it, like you could change it. You can think about it. You're not stuck with it. And there's continuous improvisation that you can do. So these are some of the advantages. So automated and digitally driven audit reflects a transformative age. So, it mirrors, a broader transformation taking place across the business landscape. So what you are able to do through digital auditing is that you're able to connect with larger teams at different locations. So today, because of this platform, Nandaji is in Delhi, Rituji is in Amritsar, I'm in Mumbai, Purav is in Hyderabad, Nakul is in Jammu and Kashmir. We're all able to connect today. I think the audience is across India. It makes so much of a difference, and if your company is somewhere, maybe in Kolkata, we could all be still auditing that. So it provides a platform to connect large teams, audit teams also across different locations. I was just talking about India. This could be across the globe. It could help centralization, standardization, and automation. So think about a MNC, like, we have conglomerates in India, which have operations across the globe. Now, if you want all of them to look and, have the feel overall basis on, a similar basis, digital audit will let you help have a centralized, standardized, and automated way of doing things. The auditors can visualize and communicate insights interactively. So if you have, say, a pie chart or a dashboard which is there, the numbers, the colors will already do the talking. You won't have to speak so much, or it will already get into someone's mind, or when you have a lot of verbose, it's very difficult for someone to pick up what you're trying to say. Digital internal audit will facilitate move to a data-driven approach. It's more data. You're looking at bigger data. You can, almost cover everything over there. It provides transparency because it's digital. You have a complete trail. So tomorrow, if someone would ask, you'll be able to provide the entire backup for it, and it increases the trust. Not like in the manual-driven ones, you wouldn't, but it's very difficult to identify the trail or transparency when you're doing it on a manual basis. Data analytics can be made integral. So another transparency thing, what can happen is that, sometimes I've seen now some of our clients are using digital platforms or software for internal audit. So, right from the kickoff meeting to the data request to, your internal audit observations, everything is tracked through that particular software. So the process owners are tagged. So tomorrow the process owners cannot say that, oh, you did not ask me for this information, or you asked me very late. The entire track is already over there. Oh, we raised the data request on 1st of March. Your turnaround time was 4 days after that. So 4th of March, you were supposed to provide us. Today's 15th March, we've not still been provided. So the entire transparency trail comes through that. Data analytics can be an integral part of the auditing, which kind of reduces the overall risk quantitatively. Auditors can drive value through innovation. So there's a lot of innovation also which can go in. So transformation and automation of the internal audit. One is you will be able to identify the blind spots, which humanly is not possible. We do a sample-based audit. So it's very difficult sometimes that you may find it within your sample. But when you're doing a digital, a digitally driven audit, either through analytics or robotic process automation, it almost covers the entire spectrum or entire population. Means your possibility of missing out on something reduces drastically. You're able to collaborate with the other lines. Again, Nandaji spoke about third line. So there are 3 lines basically within an organization with the external parties. First line is, of course, the baseline process owners, the ones who actually run the processes. The second line is their heads of department along with the top management, the board and the audit committee. And the third line is the external parties like internal auditors. It could be in-house or outsourced, but they are the ones who are the third lines. So when you're able to do a digital audit, you're able to connect with first and second lines and help them put the controls in place. So that's extremely important. We already spoke about greater coverage. With lesser resources, you should be able to do more audits because a robot is probably performing the audit. You're just reading and analyzing and discussing the observations or using the human skills which the robot cannot use. You can uncover behavioral trends, patterns. Something like, if any of y'all have used Grammarly. So, Grammarly, based on how you keep doing things, it will throw up grammar corrections. Then there is an email tone, formal, friendly, correction. So Grammarly helps with all this, so there's a human behavioral pattern through machine learning and regression, which can happen. It helps you, just do it so much quicker. It will help you conduct audits with surgical precision. You're able to say that there were 100 transactions. It's happened in 10. I can tell you for sure. Not like, okay, there were 100 transactions. I covered 10. It's come into, so if you do a extrapolation 2 into, 5, it should be in another 10 transactions. No one's going to believe you, or there's always a lot of judgment that people think that's going into it. Here, it's surgical precision, so no one can challenge you on that. So what are the steps in automation of an audit process? You have to clearly define what your vision and strategy are for automation one. You have to build foundational infrastructure. So you need to have resources like, the people who will be able to do it. You need to have servers, you need to have the right ERP, you need to have the right tool. So when I mean resources, it's not just people, but it's the entire infrastructure, and there is an expense on that. The return on investment is there, but are you able to do that? And that also means that you need to identify what is the prioritization area. This could be an expensive affair, and you may want to, go ahead with it over years. So you could say, I have a 3-year plan. In year 1, this is my priority. I will spend money on this. Third is develop a target state operating model to support and sustain automation. So if you know that you're going to be 5 times this size in the next 5 years, You can't do something which is going to sustain only for 2 years. So you have to think about the support and sustenance of automation, thinking about the journey that you're going to go through. So reimagining internal audit. So, what is traditional internal audit? It's always post facto. You complete the audit, you complete a period, then you undertake an internal audit. It kind of gives you a result afterwards. It's still not completely given up. It could happen that, an insurance company or, has processed a claim. Now someone can audit whether the settlement was fair. That's basically one of the examples of a post facto audit. Now a real-time audit is like, if you're using robots, it will do something based on real-time basis. When, a classic example could be that there's a revenue in a payment gateway, and they're supposed to pay commissions to their agents at a particular, percentage. Now, if an incorrect percentage was typed for that particular day or that particular time frame, even in a day's time, they may lose a lot of revenue. So the bot is configured in a way that it will flash anything which is beyond a particular tolerance level. And you'll be able to do a real-time audit and flash that, I think there's something wrong. Why don't you go and check this? Or you just save so much of revenue leakage because you changed the master correctly. Someone had done a typo error and that was changed completely. There's a predictive analysis using bots. So, if you're thinking, say in a quick service restaurant, it's very important how the inventory levels are maintained. It should not be too excessive and it should not be too less. Not too excessive because they're using a lot of, expiry products, very small shelf life, sometimes 2 days, sometimes just 10 days. And you do not want to lose business also. So you can't have very low inventory and you can't have very high inventory. Now, analytics will help you say that in this particular area, on this particular day of the week, generally the outgoes this much. So maybe you should stock this much to be just about right. So, this is basically a predictive analysis kind of a thing. This also auditors can help in, using. Now, what is a smart and digital internal audit? We spoke about that. Now, a smart and digital internal audit is basically not only using of technology, but using different skill sets. So if I have, one is of course the internal auditors, then you have the information technology people who will help you with the general controls and so many other controls. You should have an eye for forensics. You have someone who, the anti-fraud controls, which you need to look at. Then you have internal financial controls, which should be embedded if that is required and if that's agreed upon. You have operational auditing. So you may have an engineer who would come and help you. If you're doing a real estate client, there's a civil engineer who comes and helps you look at the running account bill, the quality parameters. So you're not looking only at the calculations and 2 + 2 = 4 or quantity multiplied by rate is equal to the value, but you're actually looking at the quantity utilization through the civil engineer who looks at the measurements, who looks at all the other backup documents. You have someone who's a compliance expert and helps you see whether the compliances have been met in the right way. And you have the risk and resilience team. There are a lot of risk experts. Your team has to be a mixture of all these people. So that's an important aspect that, either you train your team or you need to have a team which is a mixture of all these things. That's basically a smart audit. Some sectoral inputs which can happen is in the manufacturing. Are you looking at the patents, copyrights, trademarks? You could have someone legal in the team who's looking at whether they've not breached any copyright trademark issues, which they must have entered into with the vendor or OEM. How's the yield analysis done? What is the inventory turnaround cycle? Real estate, you have channel partners. A lot of times you sell your property and, the property is sold towards the end, right at the time when almost significant amount of money has come in. The sales guy would say that this guy is the channel partner. We need to pay 2% to this guy. It could happen that he's just managing it through a relative. So the channel partner tagging should actually happen at the time of order creation. So you know exactly how this is tracked, and now there is no fraud. It's a big fraud area within the real estate. Education industry, you need to see how the manpower within the education institute, how are they upskilling the employees and the students, and what are the physical facilities offered, because then they will have an edge. Today having a proper playground, dormitories, having the basic infrastructure, is all of that there. So I thought we'll just look at some of the sector inputs. Smart internal audit also means that we need to have an eye for forensics. So we are not investigators. And if you see the definition of internal audit in the Companies Act also, it doesn't say that you need to investigate any fraud, but your internal audit should always have a mechanism to identify red flags. You need to see if there are adequate anti-fraud controls. So these are just some of the examples, but in the interest of time, I'm not going to take any of these examples. The presentation will be shared, and you all can go through this. But it's important that we have an eye for forensic, right from conflict of interest to splitting of purchase orders. Anti-fraud controls need to be an integral part of the entire checklist which is looked at. So what are the various technologies which are adopted? Sorry, just give me a second. There's artificial intelligence. These are some examples. There's data analytics, there's blockchain. So, a simple example of artificial intelligence could be like a Siri, or it could be something like Alexa, who's helping us, do some of the things so easily. That's artificial intelligence. So similarly in internal audit, we can have that. We have chatbots which can be used. Analytics, we've already spoken about. There are various tools. I'll show you some of the tools, or, enlist some of the tools over here. This blockchain. Blockchain basically helps you to, create an entire trail of the transactions. You want to go back to see who did what, like a typical thing within a banking thing that, when was the card issued, who withdrew cash from the, ATM machine, what time did they withdraw, how much did they withdraw? There's an entire chain of that. That's blockchain. Now, what are the various analytical tools? Analytical tools will be basic, our desktop software like the Microsoft Excel, Microsoft Access. You have specialized audit software like the ACL, IDEA. You have, then you also have report writing things. You have big data, like you have Tableau, which is used at a lot of places. Especially like the financial industry and retail uses Tableau a lot for their analytics. There's predictive analysis, which can be done through SAS, R. So depending on which industry you're going to do the internal audit for, what is the purpose, there are a lot of analytical tools which are available. These are just some of the examples. Now, why do we need to use these in addition to Excel or beyond Excel? Now, one, Excel is prone to human errors, programming errors. There's data limitation. It has stipulated number of rows and columns. Data visualization and data communication is not so effective. It's generally just a two-dimensional thing, whereas when you're using other tools, it could have 3, 4, 5 dimensions to it. Collaboration, so you just have like an XY axis kind of a thing, or like you have a row and a column which you can use, whereas in the other tools you can use or visually look at so much more. Collaboration can be challenging. Real-time work is not possible. So if you want to, mix it or use it through another tool, it's very difficult. So if I have to real-time work also, it's difficult to do in Excel, but if I have to do it on a tool, 2 or 3 people could work together on that. So what is analytics? Basically, it breaks down vast volumes of data and then rebuilds it. It elevates performance, and it transforms internal audit by significantly automating the process. Now, what are the key benefits? Of course, it kind of lowers your costs and increases efficiency on an overall basis. It gives you deeper business insights, like, what is your inventory level? What is the sale under each of the business segments, which is a particular geography, which is giving you the highest number of sales. There's a risk identification and quantification. There's effective, because it's visual, you're able to effectively, discuss and communicate, or else you're just about, trying to convince people. There are comprehensive or concise observations, and there is advanced monitoring capabilities. You're able to look at it, keep looking at it on a periodic basis. So I'm not getting into this slide. Again, what is continuous auditing? Again, I'm not. So there is internal audit and there's continuous internal audit or controls monitoring, which happens. And using smart analytics can really help this. Now, for doing this, you have to first identify which software you want to use with predefined criteria and standards. you have to find out which are the areas for which you want to do continuous audit and which you want to do periodic audit. So generally the very high risk areas, or where there's a very important, you could have a revenue leakage or increased cost or statutory non-compliance, there you are supposed to do or should be doing continuous audit. The others can be periodic audit. So, you don't need to do everything on a continuous basis, or else it will lose the charm as well. You need to identify, do a real-time identification of exceptions, and automated reports can come out of that. And then dashboards need to be defined for senior management to review. So again, I'm not going into the examples in the interest of time. I'll talk about robotic process automation again for 2 minutes. Now, robotic process automation basically is that, it's a computer application which helps you perform repetitive low value tasks with high frequency, plus it can do 24/7 365 days, unlike humans, and it is activated by an event. It could be a incoming email, a new transaction, new batch, and it is time scheduled. Now, what are the prominent tools of RPA which are there? There is Automation Anywhere, UiPath, Power Automate, Work Fusion, Jiffy AI. There's Blue Prism. There are a lot of other tools. I'm just giving you some examples over here. What are the opportunity and responsibility for internal audit? RPA, or robotic process automation, definitely helps internal audit to increase productivity. It expands the risk coverage we've talked about. It helps address ongoing compliance issues. But you have to think about the risks which come with RPA or with any new tool that you're talking about. If appropriate controls are not put in place, your entire issue could go to, it's a complete failure. So if you change a particular business process and you don't change your robotic process automation, entire definition questions, the results which are going to come out are not correct. It's basically like garbage in, garbage out. GIGO, we've all heard of it. So you need to keep the 5-6 things in mind when you're doing the robotic process automation. It's not like once you put a robotic process automation, it's just automatically going to function and no one has any responsibility for it. Rather, you need to identify some of the things like who is going to own the RPA process, both implementation and then review on an ongoing basis. Who are the stakeholders who are going to be there? It's a very important thing. Like even for an ERP, you have like a core team. You need to have a core team for robotic process automation. You need to test the results of the RPA because it's important, like the user acceptance test. How can we control the robotics accessibility? So if you give this access to everyone and someone can change the formula on the back end, there you're never going to get the right results. So the access has to be controlled. How will the transition happen? How is the knowledge going to be imparted? How are the trainings going to be conducted? And how will it impact the human resources? So some people may become redundant. How do you put them somewhere else or give them other tasks? Those kind of aspects also need to be taken care of. There are operational matters like, how do you measure the performance? What is the desirable efficiency of robotic process automation? All of this needs to be looked at. And is this enough, or will this have scalability issues? So if you put a robotic process automation and after 3 years, your business model changes, will it be able to scale it? Will it be able to change it? All of that is important. Who designs the system? Do you get the source code with you? If you don't, what happens thereafter? So again, these are some of the examples of robotic process automation, very simple ones, like you could have the bank reconciliations, you have GST, vendor customer reconciliation, matching of receipts with outstanding invoices, your GRIR, which can be automated through this. You have the claims processing, you have the MIS preparations, employee expenses, you have the purchase price variance. All of this can be done through RPA. Much more can be done. So this is more on accounts and finance. There could be business related RPA also, which can happen. So again, traditionally, since we're talking about smart internal audit, there are also things like, the cyber security, information security controls, data privacy. So earlier it was more only on IT general controls, but it covers more of the financial aspects like, the password policy, access, logical, physical. Then you have certain domains that you cover. Then you have access controls. These are basically some of the very overall bases which get covered. What are more important things, and other things which also need to be covered now is external penetration testing, privacy, data privacy, third-party risk management. You have identity and access management. You have, like, if you have robotic process automation, what are the risks involved with that? Any other systems, how are those risks getting covered? Security operations, cyber security, technology effectiveness, return on investment assessment. So all of this also needs to get covered within the internal audit. So skill sets which we need as internal auditors is also an important thing. We need to be critical thinkers. You need to have critical thinking skills. You cannot be just an auditor. You need to have technical skills. Like I said, a purple workforce. You can't just be a chartered accountant. You need to have 3-4 specializations based on what you want to do. Your vision or the bigger picture is very important. You can't be just thinking about operational, financial, compliance. You need to think about strategy. You need to think about tomorrow. You need to think about the bigger picture. So if you have a company whom you're auditing is in the chemical industry, for example, you need to think, is the Russia-Ukraine war impacting them because of the oil? Or is the supply, if you are in the IT, you're auditor for an IT company, is the chip supply just disruption in, impacting them? Have they found an alternate? What are they doing? How are they developing the sources? That's a role also strategically that internal auditors can play. If they've got into a new business or thinking of going into new business, why are you not a part of that strategic thinking as well? You need to be more adept. But for them to accept you as strategy thinkers also, you need to bring to the table some strategy points. The problem is that we get into very operational, financial, strategic compliance matters. What is your adaptive? I know I've short on time, but I'll just take an example on the compliance. So, we generally think about, okay, this is the checklist of compliance, or there are 20 points which they've not complied with. What is a very important way of looking at it is that what was their mechanism of, keeping the checklist up to date? One, who is responsible for that? How do they identify if there are important aspects which have penal prosecution implication and reputational implication? At least those are taken care of. And what are the software that they have put in place? That's actually looking at, the bigger picture and not looking at, those 10 compliances, non-compliances were there. TDS was less deducted by 500 rupees. PF was late deposited. Maybe that's not so important. That doesn't have so much of implication. Or maybe you need to look at, if this was at one place, is it happening at many more places over there? What is your adaptability? You need to have fantastic adaptability. You need to change based on the situation. Your communication skills need to be fantastic. I don't mean communication skills mean you have to have amazing English. You could just be speaking very simple Hindi. It's absolutely fine. How you're able to convince the client is very important. Okay, so what happens? So now we all feel that, just because it's technology means we as internal auditors will get totally redundant. No, we can keep ourselves, there, and we need to upgrade. So one is we need to factor in the new and emerging skills, ensure comprehensive analysis of the data and insights, that's important. Testing of accuracy of the tested data sets. So if you put RPA, you can't just say that, okay, it's giving correct results. You need to do a cross check that, it's coming out correctly. You need to see the adequate auditing adequacy of the action taken plan on the response of the red flags. So if you've identified red flags, have they taken the corrective action correctly? What is the road ahead in terms of priority for automation? Do you need to, put everything on automation journey, or you need to prioritize that? And there has to be continued focus on non-automatable controls. Not all controls can be automated, is what we see. So you need to have more manual checks and control processes in place. So thank you again. That's it from my side. Again, thank you, Nandaji, Rituji, Nakulji, Mishraji, and ISB for giving me this opportunity. Over to you, Rituji.
Thank you so much, ma'am.
I'm also open to any question and answers. Sorry, I forgot to say that. I'm sorry I didn't leave much time for it, but happy to answer a couple of questions if there are any.
Right now, ma'am, we have a question answer session later on. I would like to extend my sincere thanks to Rachna ma'am. Rachna ma'am, I think members must appreciate the deliberations given by you, because today is the time when we have moved from traditional auditing practice to digital practice. That is most important. And what you have told us that the limitations of Excel tools, and there are different audit tools which are to be used for the modern risk assessment procedures for the business organizations are the software like ACL and IDEA. And definitely we cannot forget that MIS reports are very important for any business, for any management to take the corrective decisions at the right time. Thank you, Rachna ma'am. Thank you so much. With this, I would like to invite Mr. C.A. Puram Gala, who is identifying the red flags and report writing procedures by the internal auditors. Before I request C.A. Puram Galaji, I would like to introduce that Puravji is currently heading the internal audit function at HIL Limited, which is a part of the CK Birla Group. Prior to HIL, he was heading the internal audit function of Charan. That is a joint venture between Tyco Electronics USA and RPG Group India, as well as one of the leading consumer durable brands in India. A chartered accountant and MBA by qualification, Paul started his career with Gala and Gala and then moved to Singh and Company, Baker Tilly's Global Assurance Practice. With over 18 years of experience in internal audit and corporate governance, Purv has had opportunity to work with various global companies and Indian companies in India and abroad. Purv was associated with Indorma Group, Netherlands, and Protivity India in the consulting space. He has social and professional profile. Purv was also served as past president of Institute of Internal Auditors, Bombay chapter, and also a faculty on corporate governance at the WV School. He was a member of the Continuing Professional Education Committee of WIRC of the Institute of Chartered Accountants of India for a term 2012 to 13. He is also a member of CVO, CA Association, and regularly pens articles for the various journals. Having a versatile experience, I would like to introduce C.A. Purv Gala to my whole audience. Welcome, sir. It's a great privilege for all of us to be getting knowledge from your side. Thank you so much, sir. Please welcome, sir. Start your deliberations.
Thank you, Rituji. First of all, very heartfelt thanks to Nandaji. He has been passionately driving the and holding the flag of internal audit profession very high. Thank you, Nakul. Thank you, Rituji, for the lovely introduction. Rachna, always a pleasure to listen to you. And a very good evening to all my participants. Thanks for taking time out. This is March ending, I know, but appreciate that you have been able to spare some time for us. Let's be very clear. I'm just going to take you through examples today. So it's going to be we'll try and fit in as many examples as we can, so that we can definitely, there is a value add or a takeaway back home. So just one moment, let me share my screen now. All participants. There you go. Is my screen visible now?
Yes, sir. This is visible, sir.
All right.
Sir, this is visible.
Thank you. Thank you. Okay. Rachna mentioned and Nandaji mentioned, we need to upgrade ourselves. Let me tell you, there is definitely a room to upgrade ourselves, but there is immense potential in internal audit profession. As chartered accountants, we will play a very pivotal role now going forward between the business and also the tech part. The technicians, the IT part is something that will be driven. I mean, look at us. We have a tech support team here. But Rituji and Nakulji, they are bridging the gap between the speakers and all of us are sitting at different parts of the country. This is possible. So while technology continues to play a role, we as chartered accountants will actually play a more significant role because we need to leverage this technology. because I understand the commercial part, I understand the business part, I understand the technology part. Business or the stakeholders may not understand the technology part, and that's where our role becomes very important. So, as I said, there's somebody has correctly quoted, "In God we trust, and all others we audit." This line is immortal, and in fact, something that the CA profession has to always embark to leverage. So let me start with today's presentation. I'll quickly browse through why internal audit is necessary, what is the expectation, but more importantly, we'll focus on case studies and also some aspects of communication and including report writing. Friends, we all know the definition of internal audit. So internal audit is an independent objective assurance activity, designed to add value and improve an organization's operations. It will help an organization accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance process. That's the technical definition. But friends, tell me, how old is internal audit? Who has brought internal audit to India? Any idea? Or to the world? The gentleman here. In fact, we Indians are credited for bringing the entire accounting system and the audit system to the entire globe. In his book, Vishnugupta Kautilya introduced the concept of auditing. If you go through his book, in fact, what we read today as accounting standards, the basic premise is already there. Okay, count what is coming in, count what is going out. Coming in is, counting my inventory, count what is going out. So again, am I accounting my issues? So the concept of Gopas or auditors and accountants is as old as 300 BC, and humans or commerce is nothing. I mean, the audit per se is nothing new. In fact, post World War II, with progress of management science, the concept of internal audit has now gained relevance across boardrooms. So much so that now we are mandated by a lot of acts like the Companies Act, SEBI guidelines, so on and so forth. Why is it necessary? Let me give you an example. I'm a promoter, say, for a listed company, and I have been giving it to professionally management. The operations are being outsourced to senior professionals. So how do I get a comfort that what is happening across in my organization? Internal audit is one such premise. Management is responsible for establishing and maintaining a system of internal controls within an organization. And when they are charged with this responsibility, somebody also above them needs to look at their activities, which is called the board of directors or the audit committee. As internal audit, a dedicated and effective internal audit can always assist both the management and the oversight body in fulfilling the responsibilities. The four cornerstones of corporate governance basically are management, external audit, internal audit, and board of directors. So what we do is we assess the ethical climate and the effectiveness of operations and serve as organizations' safety net for compliance with rules, regulations, and best business practices. And as Rachna rightly mentioned, gone are those days when we used to wait for 6 months and issue the report. Management today expects that if you are visiting a plant and if you feel the pulse of the plant and if something is amiss, you need to actually tell your CEO, you need to tell your board that something is missing, please get it checked. And that's where they see the value add coming from. So we play the role of a catalyst. We provide those kind of insight and recommendations which are based on analysis of data and business processes. Idea is, friends, we need to be as much as objective as possible and not subjective. And then only we'll be constituted as a source of independent advice. How do I plan my audit is very, very important. So let me skip this slides, but I need to make one important point. We are in the business of reasonable assurance. We are not in the process of giving 100% assurance. And internal audit should always be seen as a. So there is a question today: are you adding value? What should be the cost of internal audit? Are you giving savings? No, friends. The point is, let me ask you a question. So we have a state government who runs and monitors, the Department of Law and Order, that is the police department. Should the budget of police department be fixed on the basis कि भाई आप लोगों ने ये टाइम इतनी चोरियां पकड़ी, इतना डिटेक्ट किया cases? No, they are there. Their job is to maintain law and order. Similarly, internal audit is there just to make sure that provide the right level of assurance. So it should never be construed as a cost center or a profit center. While we desire to demonstrate value is perfectly understandable. But the value addition should be an eventual outcome of internal audit. It should not be the sole focus area. Let me skip this slide. Let me come to the first part, whether it is in-house, whether it is co-sourcing, or whether it is subcontracting. It doesn't matter. The idea is correct approach and current trends. What are the current trends? So, for example, today we have a lot of firms who actually can offer value. Let me tell you, doing an IT audit is not difficult. Doing something like penetration testing for your servers, it's not difficult. There are a lot of people who can do this. All you need to do is collaborate. So with limited resources, how does internal audit function ensure reasonable assurance? How do I plan is very, very critical. Formulating an internal audit plan is a very crucial element of audit and one which requires prudential judgment. Look at this example. There is a company. It has got 2 SBUs. The process is CapEx. The risk. So I've done is I've identified the risks. Okay. Additional cost implications due to delays in completion of project. The risk rating is extreme. Corporate HR. Compliance, fines, penalties, and legal implications due to employment of contract workers in direct production process. Working capital. For SBU B, product margins are in negative, higher lead time for procurement, slower realization of receivables, and overall increased stress on working capital. Business continuity impact in short run is possible. Corporate finance. Process is taxation, payment of additional sales tax and penalties if Form Cs are not collected on a timely basis. These are the 4 risks I have identified. Now I want to make a audit plan basis these risks. How will I go about doing the formulating? Which area? And suppose we have only 2 quarters and 2 areas to be covered for each quarter. Then how will I actually define the audit plan or devise the audit plan? So, is this data enough? No. Let's do one thing. Let's bifurcate the risk further. Sorry. So now I have done is plotted the materiality in question against each risk. With this, I will be able to actually now formulate an audit plan with full confidence and tell the management, this is how a risk-based audit plan looks like, and this is how I feel I will be able to deliver value. So if you look at SBU B, the materiality is 9 million. Working capital is the issue, and business continuity impact in short run is possible. So this is the area where I should actually look at first, whether the controls are running properly or not. How can I give a value add to that SBU? What are the things that I can tell the management from an audit perspective and improve upon? The second area I can take is corporate HR, fines, penalties, because contract workers, as per the contract act, if I engage contract workers in non-core activities, then only it's fine. Otherwise, if I engage them in direct production process, I am actually violating the Contract Workers Act. So you can take that area as well. In next quarter, you could take SBU A and corporate finance. So this is how an risk-based audit plan would look like. And in addition to this, we can always plan one audit for an exceptional area. Name of SBU. Can you look at the audit plan here? So I've selected B and HR, and then for second quarter, I have taken SBU A and CST forms collection. In addition to this, friends, you can always take an area which is always never looked at: rewards recognition, leave pattern of employees, security system, insurance claim settlement, ERP login review, guest house expenses. These typically are those areas where nobody actually looks, and believe me, friends, from my past experience, we always find something or the other in these areas. And that's where actually you can tell your senior stakeholders, look how I am been able to add value. A leave pattern of employees, when we come to the examples, you will come to know how a leave pattern of employees could also be a red alert. So how do you think, okay, everybody talks about value add, but how do I gauge the feedback that, I am actually assessed properly, whether internal audit is valued or not in a company? Or if you are the client, if you are an auditing or chartered accountant who is rendering services to a client, are you called to in the important business meetings of the company? What is the level of interaction time that you have with the CEO and CFO? Do you organize training sessions, educate process owners? Do you make an annual presentation on your achievements to the executive leadership? Do you develop rating systems which can be incorporated in audit reports? And I think that, as Rachna mentioned, presentation is the key, because from people want to actually assess more from a aesthetic perspective rather than a long written report. So communication, networking, reporting structure, they are very, very important. Generation of internal audit charter, I will skip for want of time. Ideally, internal audit should report to the audit committee if it is a listed company, administratively to the CEO or the managing director. The reporting relationship actually determines the level of independence accorded to an audit function. One thing that people ignore, and I want to draw your attention here, after issuing an audit report, there is definitely something that you can do and provide value add is, how are you actually looking at the action plan that is committed in your audit reports? So suppose if you have highlighted saying that a process owner has committed that he will complete the area by complete an action of fortifying one control activity by April. Do you follow up and actually ensure that it has been completed, and then go back and tell the management, yes, I've checked, things are fine, and this audit observation should not come up in future. I think that is very, very important from an audit perspective. A lot of times, I see colleagues in practice missing out on this important part, which you may take cognizance, or please take note of this. Let us move to case studies. That's the most interesting part. I think Rachana mentioned, how do I actually, catch, needle stick in a big bunch of hay? And we can easily do it. It's nothing that it is impossible. What is important is to have a audit mind. And why and why not is an important word that an internal auditor must use very, very often. You do not have to be afraid or apprehensive that if I ask this question, I will be seen as a fault finder, or people may construe it, इनको तो business ही पता नहीं है. Nothing. You are doing your job. And your job is to ask questions. Your job is to understand the business and ask the right questions. Let's look at those case studies. What you can see now is I have downloaded a purchase register of a particular company. You can see the PO numbers. You can see when was the purchase order generated in their system. You can see the name of the supplier, item code is there, the price is there, the quantity is there, that was ordered initially or originally, what has been received against that ordered quantity, what is pending, and quantity billed or invoiced. What do you mean by quantity invoiced or billed? Quantity invoiced or billed means I have received, in this example, first line, when I say I have given a purchase order for 15,000, I have received 5,500. I have also created a liability for 5,500, which is payable to the vendor, that is AVC. So just for a moment, look at this purchase register and tell me what is wrong, or what should you look out for? What should you question? What would you analyze? And how do you actually help management with suggestions so that these kind of cases do not occur again? In case you want me to repeat, you can always put a message in the text box if that option is available. Okay, let's move to the next slide. Very interesting. So let's, here my open purchase orders should be subjected to periodical review. And in this case, the buyer has placed with the ERP system, causing loss of revenue to the company. Let's go to the example. 240 rupees for an item has been the price. This price has increased to 290. But I have not exhausted the purchase ordered quantity yet. And I have already received the material. Look at this, 9,500, 5,500. Here I have received 9,500. So this, technically speaking, this quantity, I should have created GRN here and settled the account. But somebody has collaborated and actually caused a loss of 50 rupees here. And also here. Look at the interesting thing here. What time is the PO created? Normally buyers, unless depending on the nature of industry, generation of PO at this hours is definitely something that you need to, is a red alert sign. I hope you are able to understand from this data. So friends, if I were given a big, say a 5 lakh line Excel, and if I want to catch this If I want to catch this, what I would do is I would use a tool like Alteryx. I would use any tool that is available. I just need to put the parameters. Okay, parameter number 1. Has any PO been raised late at night? Has any PO been raised for a single item with price difference? Has the PO been received raised at one rate and still open for the remaining quantity and invoiced for an additional quantity, so on and so forth. And I will get a lot of exceptions. And once I get those exceptions, I have to ask. I think this is where the value add comes in. I'll give you a latest example. In fact, now from in recent past, the earlier enactment was as an entity, whatever purchases I make, as an entity, I can take GST input credit provided 95% of my vendors are paying the GST part. So this has been amended now. So I think I should now tell my procurement department, I should tell my accounts department, and I should tell all my users as well. Friends, that please give me a comfort from the vendors that they are all paying the GST liability. And please share a copy of the returns, because it is possible today that against the invoice I may pay GST. The corresponding vendor may not pay tax, and I will not be able to take input credit for this. So that's how the value add comes. Again, sales volume discount. For April and May, let's look an example for sales we have seen for procurement. So again, company X, and I'm saying for April and May 2010, discount policy for one of their products is as under. If I order for product P for say 5,000 quantity, I'm eligible for 5% discount on selling price. If the ordered quantity is more than 5,000 to 10,000, this is basically the discount slab table. So I've been asked to do a review of open sales orders as on December 2011. Let's take the order to cash report or the sale register report. So customer name is given, sales order is given, item code is given, description of that product P is given, order quantity is given. Open quantity. Open quantity means quantity which I have not been able to dispatch. Price is also given, date of order is given, discount offered on this quantity is also given. Okay, as per the slab. So what is wrong here? As an auditor, what should I interpret? Let's look at this table now. XYZ is a common customer. Product P is ordered. 17,500 is the initial order quantity. We have dispatched only 5,500. 12,000 is the open quantity. Again, I have taken a quantity order of 22,000. I have only dispatched 7,000. 15,000 is open. That means product P and Messrs XYZ, they are actually availing higher discount in violation of the policy. What should I go and tell my management? Of course, I will ask questions, but from a control perspective, if I were to inculcate controls here, what should I go and tell? So I would say, for all bulk orders, cannot all the quantity be dispatched at one shot, or if in case the material customer does not leave the material against confirmed bulk order in 2 weeks, discount structure will stand revised. Segregation of duties, again very important part. Rachna spoke about it. We can do simple things. This is not something that is rocket science. All you need to do is just increase some level of understanding. sit with some IT guy or SAP guy, and he will be happy to help you. So let's look here. There is a ERP module which says that purchaser can actually can create a purchase order. Then there is a stores module which allows the user to generate GRM. And in that stores module also, the functionality is that allows the user to issue material for production. Very common sense nowadays that a purchase person who has got right to access the purchase module technically should not be given the access to stores module. But a lot of companies, because of cost pressures, they allow that same person is being allowed to generate a PO, same person is allowed to do a GRM, same person is allowed to issue material. How do I actually give a compensating control for such kind of cost pressures? This is not mentioned here, but let me tell you what we have done. Suppose I have a godown where I'm actually receiving my material. We have introduced a very simple thing. Whatever material is coming in at my weighbridge, we have now introduced a system where a CCTV will capture a photo of the entire truck, a 3D dimensional photo. It will also get printed along with the weighman slip. The empty weight also when the truck is going back. Again, a 3-dimensional photo will be caught. It will again be pasted along on the weighman slip. That way, at least I know that even though the same person has actually raised a PO, he has received the material. But from my payment, at least I know that that's a compensating control. I can see what is at least coming. So what is going out? If the truck is going out empty-handed or not. So you need to think of those kind of ideas, friends. So here again, for large entities, technically speaking, the person who has been assigned responsibility to create purchase order should not be assigned responsibility to create records for receiving inventory or issuing inventory. Again, case 4, again ERP controls, I have already explained. Let's go to one more example here. Let's see how a fraud can happen. I mentioned in my audit plan, take up one area like insurance, take up one area like security, leave pattern of employees, take up one example of a canteen facility billing. Look at this example. Please read it. This is for a company X which provides canteen facilities to its employees. It is managed by a contractor. Every employee is given a meal couplet. Booklets are numbered. A is issued a booklet with number 2000. All 26 coupons will contain number 2000. There is no expiry date. Employees can continue to use the coupon till the booklet gets exhausted. Charges are deducted from employee's salary. Employees submit meal coupons to the canteen contractor. Contractor collects the coupons. Company is invoiced by the contractor basis total coupons collected. Rate fixed for each meal coupon. Coupons issued to employees have been correctly deducted from the salary. Please analyze what wrong can happen. And this I found in my experience at least 3 to 4 times going wrong. So bills are submitted by contractor on monthly basis. They mention the number of coupons and the agreed rate per coupon. But there is no process to verify the bill and corresponding coupons. Payment is made by accounts directly to contractor based on invoice. What kind of fraud can happen? Number of meal coupons that were submitted by the contractor and invoiced to company exceeded the number of coupons actually issued by company X to its employees. अगर वो लोग monthly reconciliation भी करते तो at the end of 6 months a ballpark figure could be that if I have printed and issued say 1,000 coupons, then I could not be charged for more than 1,000 coupons. I could have been charged for 900, 800 or at least 1,000. But in this case, contractors have been taking us for a ride and charging for 1,500 coupons. So that's how money has been made. So you need, whenever you go to any, so that's why I said you should never, if you're visiting a plant or if you're visiting a client, never sit at your place. Keep going across to plant, at the shop floor, understand how things operate, what are the control points, apply your mind, and something else will come out. Let's come to another important part for want of time. Let's move to significance of communication in internal audit. Very, very important, as I mentioned, people to people connect in report writing. We need to be, see, this is the only function that has access right from bottom, say an office boy or a clerk, bottom of the ladder, to the C-suite people, to the CEO or the board. There is no other function that has got so much power and accessibility other than audit. So you should use this for people who are in corporate. You should use this as an opportunity to leverage your career into mainline functions as well, because you understand the processes so well, you understand the business so well. Then why stick in audit? You can, after spending say 5 years, 6 years, a lot of corporates offer this role change of role to their employees, and this should be explored. So we need to network with our auditors, and we are the only function that has access to across all the levels of management. How many times actually we go out to have tea, coffee, dinner with our auditors after office hours? We should do that. See, this is very most crucial part of an audit, and you need to report sensitive observations also. You should know how to report. On an average, friends, any CEO or CFO will not give you more than 5 minutes to your report. So if you are going to give him such a big bunch, it will not find place in his mind or eye. So in 5 minutes, how do you convey what you have done? So every audit report needs to have an executive summary, and you should know how to report red flags. Your report should catch the reader's attention. I think one area where you actually, what we do is we spend a lot of time on data chasing, and then in the end, हम लोग हड़बड़ी में we start typing a report. What we have found out and what we are trying to convey sometimes does not make sense, most of the times. And then you have to sit with the auditors or you have to sit with the CFO, explain your stance. The moment you start explaining or justifying your stance, it gives an impression that you are not prepared, because what you have done, what you want to say, it's not coming out in the report. So you need to have a general, your report should contain a general background of the area reviewed. It should contain audit observation along with best practice. It should contain impact, risks, and recommendations. It should contain management response and agreed action plan. Even if the auditee disagrees with the auditor, the difference of opinion should be reflected in the audit report. Don't be afraid if the auditee has a different opinion. Let that be put in writing by him and let the management take a call. Do we take a sign off from the auditors? We should. Do we state the date of committed action and a responsibility assigned for committed action? We should. Do we actually link the risks associated with internal audit observations? This is very important, friends. That's where CEO, CFO will start looking at. Risk क्या बताया auditor? Let's look at that. Do we actually quantify the potential economic benefits, confirm loss values, and also a methodology for such quantification? Does our report mention limitations in sync with standards on internal audit 9? Do we issue discussion draft, formal draft, and the final internal audit report? We should. Let's take an example here. You are doing review of sales function of division X. Total sales for the period 2010 to March 11 is 500 lakhs. Breakup of sales is as under. Sales to direct customers 300 lakhs. Sales to dealers 200 lakhs. Total number of dealers are 20. Your interaction with the process owners and business head confirms that the company is yet to ink agreements with dealers and distributors. Please draft an audit observation, which will contain the mainframe observation, the recommendation, impact, and management response and agreed action. Your observation should actually depict how internal audit can add value in one slide. That's it. Because the moment you write that and the moment you present to any senior stakeholder, if there is value add, he is going to call 10 people in front of you and get that action, that item or that observation actioned upon. So how will I draft? Let's come to the next slide and see. Audit observation. Your observation and recommendation should always be together, because you are saying something and you are recommending that this is how it should be resolved. Agreements not inked with dealers. There is a potential opportunity to improve working capital scenario. This is how the value add comes. I am saying there is a control lapse. Agreement nahi hua hai. But what I am trying to incentivize him with is कि sir, अगर मैं agreement करूंगा तो control तो fulfill होगा, but my working capital scenario will also improve by this much because I will obtain deposits. So here I am saying SBU sells products directly to customers, channelizes sales through appointed dealers. Total sales from dealers are derived at 200 lakhs. For details, refer annexure, which should not be attached in that report. It can means in this slide, but it can come as an addendum. Absence of written or contracts or agreement implies increased financial and operational risk for the business. An opportunity to improve working capital exists in lieu of security deposits, which can be obtained in case agreements are inked with existing dealers. Recommendation: agreement act as a medium to ensure fulfillment of performance between two parties, and in case of legal dispute, they provide official discourse. Division should ink agreements with all its 20 dealers on a priority basis. Simple English, readable. Risk and management response should be together. The responsibility is also mentioned and target date of action. What is the risk? Financial. If I don't take a security deposit, I am increasing credit control risk. So if I obtain deposit, I earn interest and that improves my working capital. No control over dealers in case they push sales of competitors' products. मैंने अगर deposit लिया, I still have something to catch the dealer on and tell him that no, you can't deal with competition's products. Increases risk of reduced bottom lines. Since dealers are not communicated in writing the minimum sales price at which they can sell to customers, because an agreement will contain everything on what are the do's and don'ts. Operational, territory-wise, customer-specific rights cannot be assigned. Absence of control over periodical budgeted target sales of dealers. Increasing legal risk arising out of dispute. What is the management response? The SBU is in the process of initializing legal agreements with all its existing dealers, distributors. SBU is also contemplating on obtainment of security deposits from appointed dealers. Responsibility, so and so, target date of action, so and so. How well it has come. The moment you write this, let me assure you, the way this approach, once you inculcate this approach, nobody will say no or debate with your observations. So with this, I think we are almost, time is up. And thanks for the patient hearing, and I'm happy to take any questions. Thank you again, Nandaji, for giving this opportunity. Thank you, Rituji, for the lovely introduction. Thanks, Nakul. Pleasure to all interact with all of you. Stay safe, stay healthy. Thank you.
Thank you so much, Purv sir, for guiding us. I must say one thing, that today's management is really concerned with the detection of the revenue areas. Which are the areas where there is a revenue leakage? And by giving us the case studies, you have informed us, guided us in very well manner how to work in SAP environment, how to work in a manner that the duties are segregated. No one is authorized to work all the seats together like in banking industry. All different people are assigned the different user IDs, maker, checker, and then validation process is there, so that there is no revenue leakage and management is happy, we are happy, and our reports should not be avoided, and the report should be very crisp and really brought into action and then execution by the management. Thank you so much, sir. Now I would like to invite Arvind Kumarji, the key challenges in the internal audit. Please PPT बंद कर लीजिए. Sir, kindly PPT बंद कर लीजिए. Thank you so much, sir. Now I would like to invite CA Praveen Kumarji. I would like to introduce CA Praveen Kumarji. CA Praveen Kumarji is a senior partner and national head of assurance division of ASA. The organization has 8 offices with 700 plus team members. CA with over 30 years of post-qualification experience, a commerce graduate, holds diploma in information system audit besides certification in IFRS from UK. Has been a member of NACAS, Accounting Standard Board and Expert Advisory Committee beside various research group and committee of Indian CA Institute. Has an experience of working on large number of risk advisory assignments, audits, forensic, fraud investigation, and IFRS transition for various corporates. He is a speaker at national and international forums on his subjects of expertise, faculty with reputed institutes like IMT, NAAA, ICAI, ICSI, ICWAI, CAG, NIFM, MCA, IICA, DU, etc. Written a book on consolidation under IFRS, converged Indian standards beside papers and articles published in various renowned journals and magazines. Invited to present paper by reputed institutions in Japan, Nepal, Myanmar, Dubai, Singapore, besides various large companies and branches of ICS across the country. Personal hobbies include marathon running. I think this session is also like a marathon because marathon is like in our blood, sir. So with my folded hands, so senior person to me, I invite sir, please sir, enrich with your experience to all of us. Thank you, sir. Thank you so much.
Thank you very much, Rituji. Thank you so much. I agree with you that these sessions are really very intense sessions which you are having. And I'm really grateful to Nandaji and the Institute of Chartered Accountants, the Internal Audit Standard Board for giving us this opportunity to interact on this virtual platform. So without any challenge or without, even if we have very little time, we are able to reach wherever, the sessions are happening. So right now we are in Jammu and tomorrow we will be in South somewhere and then we will be in West somewhere. So it's made life very easy for us. So thank you very much for your generous words. And if you allow, I will share my presentation. Is my screen visible to all of you?
Yes, sir.
Rituji,
yes,
the screen
it is visible,
okay.
Sir. It is visible.
Okay. So the topic which has been given to me is internal audit, especially the challenges which we face in internal audit. And I was very carefully listening to the session of Mr. Purav Gala. And I believe the way, in such a simple way, he explained how the internal auditor should use the tools and pick up the points, pick up the red flags, and how the reports can be written. I think very, very nicely explained. So I will take a step further and I will be discussing on overall basis what are the challenges the internal auditors are facing. So we are, helping some companies in their internal audit, and these are some large manufacturing companies and some promoter-driven companies. And when we carry out internal audit, the first question which comes in anybody's mind is, what is the purpose of these audits? Like there has been a lot of questions nowadays in the media, in the social media, everywhere people are talking about, competition arising from different corners. But what is the purpose of auditing? So in the books, we read that auditors are kind of watchdog. They'll make a noise if something is going wrong, but they will not do much about it. But I think now the definition of auditing has undergone a change. For different kind of auditors, the different roles are expected. So just to give you an example, that if you are doing forensic audits, then you are working slightly more than a person who is doing a duty of police person. You are collecting evidence which can be produced in the court of law. In case you are doing internal audits, then you are working as eyes and ears of the management. You have to inform, the people who are charged with governance about what is happening in the company. And independent directors and the board of directors and the audit committees, they are now taking very serious note of the information which is coming out of the internal audits. And I'll share with you extracts from some study which was carried out, which is report to the nation, which said that the frauds which are caught, the significant number of those frauds are caught by internal audit team only. So primarily when we carry out internal audits, our role is to work as eyes and ears of the management. But then the challenge, in each slide, I will be talking about the challenge also. The challenge is that you have got different kind of stakeholders. So the promoters or the audit committee, they are, sitting on 30,000 feet and wants to know what is happening in the company, what is what is happening in the competition, and whether the company in which for which they are responsible, that company is meeting those benchmarks or not. So that is the expectation of the audit committee or the promoters. When you move into the company, the CEO will expect that internal auditor will add some value because they are spending money on this. The internal audit should help them in adding value, and that value should be more than the money which has been spent by them. When you go to CFO, then he would look at internal audit from a very different perspective. He would not only try to tighten the controls, he would want to see whether anything is, any leakage is happening in the company or not. And when you go to the process owners, they have a different expectation. They feel that they need some improvement in the processes which are being run by them, and internal auditors are like through internal auditors they can make their voice heard to and they can communicate to the top management that there is something going wrong. So each one has got different expectation, and while you are working as eyes and ears of the top management, you are also working as ears and eyes of the regulators also, because on the other side the regulator would also expect that internal audit function will bring about in case there is any fraud happening or in case there is anything wrong which is happening. So different roles are being played. For process owners, you are like a consultant that, okay, sir, you go in various companies and you know what kind of practices these people are doing. Can you suggest something? And can you, can you connect me with somebody in the similar industry so that I can also take some guidance from them? So you work as catalyst, you work as consultant, you also work as watchdog, you work as policeman sometime, and you also work like, eyes and ears of the top management. So it's a very interesting role when you are doing an internal audit. I think gone are the days when, those auditings were done on only on the transaction based. Now it is risk-based internal audits which are being preferred by most of the industries. So let's go to the, slightly deep into the internal audit. And one of the main challenge is that when internal audit is happening, it is expected by all the stakeholders that they will be able to catch the frauds. So you, my friends, are, let us say, have been appointed as internal auditor of a company. And you need to see where all the frauds can happen. So here are some challenges which you need to be very, very careful about and which you need to, catch these signals. In case there are ring fencing happening. So people are trying to protect their own assets and people are trying to, move in that direction. And whenever the discussion is happening, they say that, okay, I want to ring fence tomorrow. Nothing should come to me in case something is going wrong. That's a signal for you. That's a red signal for you. You need to be more careful as internal audit. We were doing audit of a company and we realized that, their bill of material, it was very frequently the changes were happening in bill of material. So we were wondering, how can bill of material be changed so frequently? So this is a very clear signal that something is not right in that company in case the bill of material is changing. And also in case the vendors are very frequently getting changed. That is also one of the signals which you need to be careful about. We were doing audit of another company, internal audit, and we realized that the management was totally reliant on the data which was coming from the software. So when we were sitting in front of the CFO, he was saying that, look at my dashboard and this is how the revenue is happening. This is how purchase, this is the trend, and this is how things are happening. And he was not going deep, or he was not looking into the details of, how the softwares are working. When we checked about their IT systems, we realized that they have got this software which was made in-house. And this software was more than 35 years old, and there were patches and patches which were added on. And when we get into details of IT testing, we found that there are so many places the control weaknesses were there. So passwords were common, and many things were there, and the data was not at all in a shape where you can rely on that data completely. So over dependency on technology is also a signal which you should be careful about. Too many complaints. So in one audit we realized that there were so many complaints which were coming to the audit committee, to the management, to the directors. We told them that this is a red signal. That means you need to be very careful about, when you are defining the scope of internal audit. You cannot just say that, okay, just complete the formality which is required under the Income Tax Act and give us the report. No, it cannot happen like that. So you need to expand the scope and you need to look into the details. Another signal which you as internal auditor need to see is when there are a lot of delays happening in the compliances. Nowadays, the large companies, they use a tool, which gives them a dashboard and which compliance. So let us say you are running a business house which has got 29, 30 companies. You need to know whether all the compliances at each of the company, they are being met. And then On top of it, if you are into construction business, then whatever compliances are required, whether it is related to RERA or local compliances, then you need to understand that in case there are delays happening, that means there is a very clear signal that there is a control missing there. And trust me, the compliances are not small. I was having a discussion with one of the large group, and their internal audit head, she was mentioning that we are really finding it very difficult to manage the number of compliances which are required. So at one site there are more than 100 laws which will become applicable at one construction site, and then the company needs to ensure that all the compliances are in place. So in case the delays are happening, that is a clear-cut signal. So I'm just sharing with you the broad perspective, the challenges which internal auditors face. It is not that you accept the assignment and you carry on, go ahead with the audit. You need to first look, look and see around. And then you also need to look at the financials of the company also. There may be a situation that the financial ratios are going down. These are also the signals which you should be careful about. There are many places where, a very lean, very small team, they are allowed to take support from outsourcing agencies, but they are having very little time and they are just focusing on, whether the internal audits are completed in that in the processes which were defined for that year or not. But you need to before entering into the internal audit field, you need to look at their financials, whether the ratios are going down, whether the working capital is increasing. When you look at such kind of situation in a macro level, you realize that there may be many things which can go wrong. And then you can focus your energies on that aspect. So when you are doing internal audit as a checkbox approach, and you have to just complete, and you are inside the company and you are doing audit of that particular process, you are too engrossed with the nitty-gritties and you forget to see the overall picture where the challenges are, where the challenges are. In case the net worth of the investments are going down, the internal auditor need to see what is happening there. And then increasing inventory, in case your inventory is getting increased and whether the disclosures are appropriate or not. Once you look at the financial statements, the internal auditors, you will be able to understand which areas to focus on. So some time ago, today only few hours ago, I was having a discussion with a very senior professional, and we were discussing that when defining the internal audit scope, which areas need to be looked into. And so I give you some examples. So if you are doing internal audit of, let's say, BPO industry, then HR becomes naturally your the main head of expenditure. And that area becomes very critical for that industry. But if you are doing, engineering company or R&D company, then probably there are very few people, and most of the expenses are related to research and development, and so number of people might not be that much. So you need to define scope according to the areas where there are maximum risk. So you need to look at the signals which I shared with you, and you need to also look at the financial. This is before you start your internal audit plan or you make the program for the next year. So now we are sitting in the month of March, and many companies are designing their internal audit program for the next year. And this is something which is a challenge, that many times they miss out on the bigger picture. So there was a report to the nation by ACFE, And that report provided very interesting information. And they did survey of the frauds which have happened across the globe. And the information which this study has brought out is very interesting. It says that approximately 5% of the company's annual revenue is lost in frauds. It's a global picture. It's a global situation there. And they have also given a number that more than $4 trillion is a anticipated loss. And also they mentioned that 85% of the fraudsters were never charged or convicted. And internal control weakness was responsible for almost half of the frauds which had taken place. They said half of the frauds. So how will a company catch the fraud? How these frauds were caught? So this study, which was carried out globally, it said that 50% of the cases were detected by way of tips. So somebody gave a tip to the management, and the frauds were caught. And as I had mentioned in my previous slide, 15% of the fraud, which is the maximum number of frauds were detected by internal audit department. And then 13% were detected or caught by the management, and 7% frauds were caught by accident. So somebody carrying out some mischief, not sitting on the seat, the other person comes on the seat and found that there are some papers lying, and when you look at the paper, they realize that a fraud is happening there. So fraud can be a financial statement related fraud. In terms of number of cases, they may not be much, only 10%, but asset misappropriation fraud, the number of frauds may be very high. I mean, 85% of the 89% of the cases, and least costly, per fraud, the loss was not that much. Whereas in financial statement fraud, each fraud costed a huge amount. And then 53% of the organizations, they recovered nothing from the fraudsters. And, we were doing an internal audit, and we realized that something is going wrong. And we pointed out to the management that the person who was responsible for procurement, this person was taking the kickbacks. So they just, dismissed the person and thrown him out, and no action, no further action. And that person used all the money which was defrauded by that person. So nothing could be recovered for that person. And when I looked at this report, I realized that this is the same trend across the globe. So generally, people are not able to recover anything from the fraudsters. Now the challenge is, how to deal with the red flags. So I think the previous speaker, they spoke about red flags, which we need to, when we are looking at the data. Here, I am talking about the red flags which are demonstrated by the people. So you are a qualified CA, you are going to do an internal audit of an organization. And you must know that, the same study which I was discussing, 85% of the people who carried out those frauds, 85% of those people, they displayed at least one of these red flags. So when you're dealing with the people and one of these red flags are visible to you, then you need to be more careful. So, and this is a challenge for internal audit. It's not that all the people who are going through difficult times will be doing a fraud, but possibility of fraud is very high. And I will explain it to you with the help of examples. So 41%, this study said, the people who carried out the frauds, 41% preparators exhibited the red flag that they were living beyond means. And this was not very complicated. This is not a very complicated red flag. So when I was working as an article clerk, and we had gone for doing the audit of a small company, but they had various salespersons who were used to go to the market and would do the selling and would do the collection. One of those salesperson was, very bright, very charming, and very smart. And that person used to smoke very costly cigarettes. used to have, nice clothes. He bought, recently had bought, that Honda bike, a Splendor bike. And the salary of these people were very, very small. So I was, wondering that this person must be from a very rich family, and then why is doing this small job? Later on, we realized, that this person was doing a teaming and leading kind of a fraud. So that means he was collecting the payment from vendor A, using that payment for himself. When he would go out and collect from vendor B, he would come to the company and say that I had collected from A, and he would clear the account of A. Then he would collect from C and would come into the company and clear the account of B. And then if there is a margin, he would use that margin for his own purpose. So this person was doing that teaming and leading, and he was demonstrating. This was visible to everyone. And that this person was living beyond means. Another example, I mentioned to you that there was a person who was involved, who was responsible for procurement in a manufacturing company. Everybody in the company, they were, he was tightly controlling everything to himself. This person had purchased some flats and then bought Fortuner cars, and, he was changing cars. So people used to feel that this guy is really, they were all having a hint that this person is making money. But how, that they were not aware of. That could come out of the only when the internal audit function, they reported about, a small thing came out that last year the scrap sale was this much. In the current year, the scrap sale has reduced, whereas the revenue, the production, and the raw material has significantly grown. But the scrap sale had reduced. And when the internal audit team went and looked into the analytical of the scrap, it was realized that physical scrap was also not there. And then when they confronted the scrap dealer, he agreed that he was giving a significant amount as a kickback to this procurement head. And then it did not stop there. That provided first evidence of wrongdoing, and then almost for each vendor, there was some kind of a setting which was done by this person. So when a person is living beyond means, this is one of the red flags. And some cases we find that people are going through financial difficulties, and that's why they carry out frauds. The unusual close association with a vendor or a customer is also, a red flag. So excessive control issue, like, I had given example of this procurement manager. He was absolutely controlling everything in that company related to procurement or purchases. And he was not sharing the duties with anyone. And he was like, a kind of a king in his office. Nobody would dare speak against that person because he was so authoritative. And this person was also not taking vacations. He was not going on leaves because he was scared the moment he will be absent for some time, somebody else will start dealing with those vendors, and his scheme will come out. Ultimately, the same thing happened. And when we looked at, the web series on the Netflix and Sony Live, when we realized that, the bankers who were helping Nirav Modi, they were not going on vacations, and they were on the same seat for very, very long years, which is against the control policy of the banks to, transfer the person within 3 years. Recent family problems is another red flag. And when we took a training about the forensic audits, we realized that there is a syndrome which these people demonstrate. Those people who are carrying out the fraud, that syndrome is called too good to be true. Like, just to give you an example, that the employee is not taking advance and the person is going for a foreign travel. There is a possibility that the person has accumulated some good funds. So, in those series, you could see the people who were buying jewelries and, taking family out on vacations on by air and all those kind of stuff. Then abnormally slow in performing routine work is another signal which you will all feel. So when you are going and doing the internal audit, you might realize that the persons who are very, very slow, those persons, they are expecting something. And when we deal with some of the government departments also, we find that those kind of people who are abnormally slow, they generally expect some favors. So the frauds on a global level, they happen in such a manner, and the signals are read. People can read those signals. Now the challenge in front of the internal auditor is that you are looking at these red flags which are happening around you, which are being demonstrated by the people. But you cannot say that all these people are carrying out the fraud. All you need to do is to be a little more careful, to do your procedures in a more detailed manner. And trust me, you will need to have your own documentation in place, that so that tomorrow, in case a regulator or the audit committee asks you a question, that how did you carry out, how this fraud has happened and why you could not find it, you need to have a clear answer to that. So Donald R. Creasy had given this model where the frauds, wherever the frauds are happening, there's a complete triangle. So the person will have a motivation or incentive to commit the fraud. The person will have an opportunity and the knowledge and the ability to carry out the fraud, and that person will always have a rationalization of that those dishonest action. So as internal auditor, whenever we are catching the frauds, we realize that this triangle is complete. They will always have a rationalization, and COVID situation has given a lot of opportunities. A lot of people have used that rationalization, that my salary was reduced. So what if I'm taking a little bit of advantage because the data is in my possession? So people are really, taking advantage, and they are having motivation or incentive or some kind of pressures to commit the frauds. Now, the challenge is that where from these frauds starts, where from they start. And that is something which internal auditors need to know, that in case there are unnoticed errors and gains from the past experience, that is the beginning of the frauds. So in case you find that there are errors which were not noticed, could not be caught by the management through their control mechanism, that means there is a possibility. So some kind of seed is there, which will result in some kind of a fraud in the future. Then system deficiencies and complacency, coupled with opportunities, are also the genesis of these big frauds which happen. And then lack of accounting knowledge of top level executive and too much dependence, like one of the example which I shared, that too much dependence on the technology and too much dependence on the people also specific. So I can share with you an example that, we were doing audit of a small company. The promoter himself used to sign all the checks, and he was just signing the checks which were prepared by an accountant, which used to be working with him for a very long time. So this person had complete trust on this accountant and whatever. So even though he was signing the checks, but he was totally relying. So that is too much dependence on that person. And later on, we realized that this person was actually, taking kickbacks from the vendors while making the payments. And he was totally justified that salary to ज़्यादा मिलती नहीं है, but somehow मेरे को गुजारा तो करना है. So it is fine if that vendor is giving me some costly gifts or something like that. But there are myths when you are carrying out internal audit, or you are picking up internal audits of a company, and now it has become more important because the company law has increased the scope. The number of companies which are going to get internal audits done, those numbers have increased. So there are some myths in the market. People feel that they have ERP systems, so frauds cannot happen in my company. That's a myth. It's not correct. Then trustworthiness, been with the company for a very long time. I have shared an example that this employee who was an accountant with this promoter was there for more than 20 years, but still he was, carrying out that fraud. But trustworthiness is one of the myths that this person cannot do the fraud. He is my trustworthy person. So account pay cross check. People say that we are making all payments by cross checks. So frauds cannot happen. But you don't know, for the same material, 2 account pay checks can go. You do not know that material has come from A and account pay check is going to B. You do not know, and nobody will point it out because the person who is making those checks is involved in that transaction. So setting up system can be deferred. We are a startup, we are growing too fast, and we do not have time for these setting up the systems. We have to increase our revenue, and we have to increase our portfolio. So this is a myth that nothing wrong can happen. Then materiality, small limitations or system weaknesses may be ignored. It's fine. Small little problems can be, it's okay. Just give me 1 second. I'll have to. Yeah, and then once the fraudster is identified, and fired, the problem ends. Just give me 1 second, please. Yeah, and then, once the fraudster is identified, this is a myth that once the fraudster is identified and fired, the problem ends. There is, but, we have seen it with our own experience that when we pointed out some mistakes, the management picked up that person, thrown him out. After 3 years, when we were doing the same process again, the next person was also committing the similar kind of, fraud. So fraudsters identified and fired is not a solution. You have to check and correct the system, control system, and that's what the purpose of internal financial controls also. And that is the main purpose of the internal audit. Like, Mr. Pura had given very good suggestions on what kind of recommendations should be given in the internal audit report. And those reports should convey how the system can be improved. And then difficult to identify fraudsters in large group, that's a myth. You can very quickly and very easily, nowadays the technology is so advanced, you can very quickly point out that which person was carrying out a fraud. So I will be sharing one case study with all of you. The construction site, we were doing an audit, and we realized that the leakage, the financial leakage was happening at all the places. It was happening when the raw material was coming. It was happening when the material was given to subcontractor, and it was happening at the material supplier level as well. So the financial leakage was happening. So when the material was coming in trucks, we realized that nobody was checking in detail the quantity of the material which had come. So when our audit team was sitting there, so the material came by the truck, and the audit manager said that, okay, we will count, we will do a physical count. So when they counted, they realized that the amount which was mentioned in the challans and in the invoice was, let's say, 100, and the amount which was there in the truck was 85, and that truck had already cleared the initial clearance of the gate. So counting was not properly happening. They were just looking at the broadly. And like I had mentioned, that too many changes was happening in the bill of material. And then when the material was sent to subcontractor, the monitoring of the subsequent installation was, there was a leakage happening there also, because nobody was closely monitoring. And whenever, there was a damage, which were charged by the customer, was not passed on to the subcontractors. We realized that subcontractors were giving favors to the people who were at the sites. And then procurement team, when they were taking the material from the same person year after year after year, and no further quotations were taken. But surprisingly, when we did third-party verification, we realized some of the vendors were not even existing. Material was coming, I don't know from where, but those bills were, fake. But somehow they were carrying out this activity. And this was the first time when they carried out the internal audit. The management was surprised that how can such kind of courageous frauds could have been done by the people who are, who are responsible to manage the plant. There was, collusive bidding which was happening in another case study. When our article clerk, when they were doing the audit, they pointed out that, sir, there were 10 bids which were shortlisted. 6 out of those 10, they are, similar tenure, consistent in terms, similar kind of font was used, and 5 out of those 6 were coming from the same building. I mean, the offices were just adjacent. So we realized that, the bidding was just a formality which these people were carrying out. But actually, they were the same group of people who are just giving them different bids, and they were doing the work. So another challenge which the internal auditor face is not all the internal auditors are CAs. There are many times, the MBAs, the people who are from, different backgrounds, they are doing. But even for accounting fraternity, it has become a real challenge these days, because on one side, when you are making the financial statements, they are so complicated. They have become so complicated, so difficult. On one side, you have your regulations, which are company law and other laws, which are telling you how to prepare your financial statements. Then you have your regulators. Reserve Bank of India will tell you how to prepare. Then if you are into insurance business, then IRDA will tell. If you are a listed company, then SEBI will tell you how to prepare the financial statements. And you are using the accounting standards. And then accounting standards are accounting standard for the companies, which are published by under the Companies Act. Then accounting standards which are for non-companies, they are accounting standards which are published by the institute, and then level 1, level 2, level 3, level 4 kind of organizations. And it doesn't stop there. Then you have listed companies, and the companies above a threshold, you have Ind AS. And then the companies which are foreign subsidiaries, then you have IFRS. And then it doesn't stop there. You have standards which are issued by the tax department, ICDS, Income Computation and Disclosure Standards. For government sector companies, there are different standards, IPSAS and all those kind of things. And companies under manufacturing, they have been given some standards by the Institute of Cost and Work Accountants. So basically, the financial statements are prepared to help user taking a decision. And there are so many complications that people, who are doing internal audit, they many times they forget, or they don't look at the overall picture, how the financial statements are prepared. So while doing the internal audit, there are basic principles which one should be careful about. One should be taking care of confidentiality. That's a challenge which is in front of all the internal auditors. If you are sending your teams, you need to take a specific affidavit from them that they will not be disclosing any of the information, because many times you are going to the plants and there are some sensitive information which is there. So many companies, they do not even share that data with the internal auditor. But in case they share the data, there is a possibility that that data can be used by the competitors also. So skills and competence, like we were discussing, whether there should be engineers, there should be lawyers, there should be accountants. So the combination of these people should be there in your internal audit team. And like I had mentioned earlier, the transaction-based internal audits, the time has gone. Now there is a time for risk-based, internal audits. Even Reserve Bank of India has asked all the NBFCs to carry out, to put up a framework which is for risk-based framework of internal audits. Now, internal auditor will need to report to the managing, director and the audit committee directly, and they will not be involved in any other function other than internal audit. And those people who are, making those risk-based internal audit framework, they are aware the kind of expectation which is there from the regulator, they're very, very high. And then another challenge is that the focus needs to be system and process, whereas historically the transaction had been in the focus. The internal auditors are now facing this challenge. They need to do a transition and look into the system and process, how this mistake can happen. Then internal auditors are required to be involved in decision making, and they will not, so they will have a comprehensive view of what all is happening in the organization. And they should also be sensitive to multiple stakeholders' interests. So there are promoters, there are investors, there are joint venture partners, then there are CFO, CEO, process owners. You cannot stand up in the audit committee and say that, okay, this company is all the controls are failed and it's not happening. You need to understand why the business is taking those kind of calls and why the procurement is happening only from one vendor. Why the people who are given additional bonus, and why the primary schemes and secondary schemes are made like that. So you need to understand the business, and whenever you're doing an internal audit, you need to be careful that there are various stakeholders, and you have to take care of interest of all the stakeholders. Now, I will not be spending time on the report drafting. I think Mr. Purav Gala has already shared with you in detail. Only thing which I'll be sharing with you is how to plan the audit. You need to understand that whatever time you are deciding, you need to have time for your field audit, and you need to have different levels of audit discussions. First discussion will happen with the process owner. Second discussion will happen. So once the process owner is on the same page, then you need to have an exit meeting with the CFO, and CFO needs to be on the same page. And then you will go to the CEO. And after all these people are on the same page with your observation as well as a recommendation, as well as they have got your buy-in of what all will happen and when it will happen, who will be responsible for that activity, then it will go to the audit committee. You need to be careful that you cannot have reports sent out without having these closing meetings. And because ultimately, when in the audit committee meeting you are sharing a report, and the process owner say, no, this report is what they are saying theoretically right, but practically it is not possible. The person who will be getting the scolding will be the internal auditor. Why have you not taken that into the consideration before? Why are you wasting our time? So you need to have your approach, a very clear approach, because you need to involve your cross-functional teams. You need to benchmark, the practices which are followed by various companies in the same industry. And you need to have a regular feedback from various levels of client. and you need to have teams which are equipped to use those tools, which was also mentioned by Mr. Gala. So very critical is that when you are doing internal audit, you need to collect your audit evidence, whether it is planning, whether it is data analysis, or whether it is sample testing. You need to really have your audit evidence in place, and without that, it cannot be complete. So in reporting, just to summarize what Mr. Purav Gala has mentioned already, that you need to have executive and detailed report. You need to have scorecard, risk rating, root cause, and category classification. And you can have various kind of formats for your reports. But most important part is that it should be clearly understood. So for example, on this first, on your top left, one chart is giving you an indication that all the compliances are good. They are in green color, but one compliance is amber color. So there is a challenge. There was delay happened. So this kind of snapshot will be appreciated by the people who are sitting in the audit committee. They, as mentioned, that they do not have time to go through the details. But main challenge is your scoping. You need to have a very detailed scope of internal audit, because in case you are not doing anything, then you need to mention that you are not doing those areas. And even if you are doing some areas, you need to mention which all areas you are doing, which are the areas which you are looking at the head office or the local office or the branch office, and what is the periodicity with which you will be checking that area. And you will need to align your internal audit with the IFCFR, because ultimately the statutory auditor will see whether the risk control metrics and the controls which the company has defined, whether the internal auditors have any observations around those RCMs or not. So when you will be adding flow charts to your report, which Mr. Gala also mentioned, that the report should be good for the eyes of the people who are senior executives. These will be adding value to your reports. There are a lot of internal audit. So there are standards on internal audit. It's thanks to the institute and the Internal Audit Standard Board. They have brought out all the standards. So tomorrow somebody is asking a question, you can always say that you have relied on the guidance which is coming from that standard on internal audit. So please ask your team to look into these standards. And when you are making your work papers, please follow these standards. So the last slide, the challenges, if I have to summarize, the main challenges which internal audit, and I will be very, very practical about it. You will go to the company, you will start doing your audit, process owner will give you some data, and you will bring out your observations. And the moment you will go to the CFO, he'll say, no, this data is not correct. You have not been given complete data. You should have looked at supply chain also. You should have looked at demand planning also. Why are you, why you have not looked into the business side? Go back and look at the data again. And he would scold the process owner. Why have you not given that kind of data to that person? Then you know that audit committee is coming and you have T-5 and you've got only 2 days left. You will go back to the data, start working again, and then take process owner onto confidence. And then we will come to CFO and CEO. And so data becomes always a challenge for internal auditor. And it is a very practical situation. And that's why the internal audit teams will always burn midnight oil near to the audit committees. Process shortcomings are always there. It's not that everything is perfect. None of the companies will have perfect processes. You will always have some kind of shortcoming. So you will need to understand the business reason why and how these things are happening. Once you are on same page with them, then you can provide a recommendation. And that is one challenge which the internal audit team face. When they bring out some shortcoming and they get very excited, and then they start writing their reports, and that observation is shot down by the CEO, the CFO, or even the process owner, that this process shortcoming will remain. This shortcoming cannot be removed. Why are you spending so much of time? Then there are many times the internal auditor will have a pressure from the top. They will say that, oh, your point is very valid, very nice, but we recommend that please remove this from your slides. So that's a main challenge, for internal audit team. They will say, no, 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 please remove this point in the audit committee. How can we take this point? So you will always have a challenge of getting pressure from the top. How to know what is happening in the other companies, industry practices. If you are a large CA firm, then you might be doing a couple of other audits in the similar industry. But if you are a medium size or a small size firm, then how will you come to know what is happening in Nestle or Dabur or other companies? You will there will be hardly any data related to industry practices, and very little data is published. So that becomes another challenge. And then how to draft your observation. That is something, a big challenge which the internal auditor face. So challenges are there, but these challenges are not something which cannot be handled. So one need to be careful enough to draft their report in such a manner which can be accepted by the people around. So saying that your CEO and CFO, they are they do not have any control over anything. This is very bad statement. You have to say that there is a scope of improvement in the processes. So it's not that the person is wrong, it's the system which needs an improvement. The moment you will get into a direction which is acceptable for all, trust me, they will continue having you as their internal auditor again and again. So with this, I stop my presentation. Thank you so much for your time, and I hope that added some value to you and your time which you have spent on this Saturday evening. I think I was able to, I hope I was able to, add some value to your time. Thank you so much.
Thank you so much, Praveen sir. If you give me permission, I would like to add two things into your lecture, sir, if it is your kind permission, sir.
Please, 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 Ritu.
Sir, as you told us that we are not supposed to look into the trial balance, we did the internal audit of one listed company. We approached to the management, there is a revenue leakage in your account section. But management was so adamant that there is no leakage of penny. I am checking each and everything, and whatever the MIS's reports are coming to my desk every day on my workstation, I am checking on a regular basis. We said, no, sir, there is a garbage. GIGO, what is being required to be fed into the system, that input is generating the outputs. But our management, for whom we are rendering the services, they are not agreeing what we want to say. Actually, what I want to say, we as an internal auditor are not supposed to look into the trial balance figures. We need to look behind the figures of trial balance, and that is a documentary evidence.
Absolutely.
As you told us, a very person who is an authoritative person sitting in an organization, he was holding a position of monopoly in a company. He says, I am a boss of the company and my boss is a foolish person. Who is paying him the salary? He is a foolish, and I am the pilot of the company. We start checking the invoices, sir. You will be shocked to see there was the excise duty which is refundable on the packing material of the export bags. And that gentleman has written off in the books of accounts. He never applied for the refund of excise. He never considered the receivables in the books. We jot out the figure, and that figure was rupees 75 lakh for a year. And from last so many years, that gentleman was doing and creating such a mess in the accounts. We accumulated the evidences, substantiated the figures to the management. Management sent us to the head office, to the CFO. We put the figures in front of CFO, and the chairman of the company hit to the CFO, not to the gentleman. He said, why we are paying you such a high salary to you and all the perquisites? You need to look all the things what Ritu Arora is checking. Sir, I am getting the internal audit of that company every year. Till date, what I have contributed to that company, I have not received a salary or a consultancy fees. That's very true. But yes, I generated a goodwill wheresoever that company goes. They say, "एक बार ऋतु करो कराके देखो," you come to know how the audits are there. So such kind of people are always in the companies. We need to look behind the trial balance, not to look into the figures of the trial balance. And that is very important, sir.
Absolutely.
And thank you so much, sir. I took your time.
Absolutely. You also carried out, you also did that forensic audit course.
Sir, there were some service tax returns on which service tax refund required to be taken from the government. That gentleman was also writing off.
Okay, okay.
So whatever the liquid money we can take from the government, which our sole right is there, that gentleman is putting and writing off. Management is saying, I am checking cash voucher of ₹5 on the repair and maintenance also. So there is no leakage. So being a chartered accountant as an internal auditor, we look behind the trial balance, not to the figures of trial balance only.
Very true. Very right.
Sir, there are few questions. Some people are extending vote of thanks first. Some people are saying, please share the PPTs. Some are saying very informative session. And two questions are there, sir. Internal audit restrict to audit of financial activities of the organization and does not cover audit of management functions. Therefore, it is better to have management audit, which is extended version of internal audit. Management, what we are discussing, sir, management audit also audit management functions such as how much effective is company's policies, organization structure. Secondly, artificial intelligence should be built in any form of audit. Sir, they want your opinion and your expert view.
So I agree, and this is exactly what we were discussing, that internal audit is not about the finances. And you had very rightly, worded it that we should look behind the trial balance also. And what management audit, so nowadays, like I mentioned, risk-based internal audit, so that includes the management functions also. So that certainly is part of internal audit framework, which one company should have. Absolutely.
Second question, what is your stand on IIA?
That is perhaps a question for Mr.
I'll come in because
yes, sir. Yes, sir. Please
I've been the
please,
past
sir.
president for IIA Bombay chapter. So the IIA, the Institute of Internal Auditors, is the apex body for
Sir,
global internal
please
auditors.
on your camera, sir. Please on your camera.
I am actually traveling at the moment.
Okay, sir.
So you'll have to excuse me. So, but they offer a lot of courses. In fact, we have a collaboration with the institute. And if you are a chartered accountant right now, you need to give only 3 exams. Please reach out to the institute office and connect for more information. In fact, I has its offices all over India. The chapters are there for all the major metros. Please reach out to them. And definitely the CIA is a course which is worth attempting for if you're looking to make a career in audit or practice.
Okay, sir. Thank you. Another part is, given the focus on AI and ML by various organizations for their operations, can you share some insights or best practices witnessed by you with respect to organizations who have adopted a board approval AI and ML risk management framework?
So when they are using the word AI, that means artificial intelligence?
Yes, sir. Yes, sir.
So I think nowadays, I had also mentioned that traditional auditing is going to undergo a change. I'll share with you one example that, in SAP environment, or in case of highly, tech-oriented companies, like for example, there's a payment gateway. So you are clicking a button and buying movie tickets, and you are making a payment through bank to the cinema hall, but there is a gateway in between. So if you're doing internal audit of that gateway, how many transactions have taken place? I think millions of transactions, they happen within a day only. And what happens in a month, what happens in a year, and how, whether, their revenue, their expenses, and whether they are partnering with the banks or the companies like Visa and Master, how they are doing it, and what kind of revenue they are demonstrating, and what kind of MIS and what kind of profitability they are generating. You need to have tools. You need to have IT people in your team which is doing internal audit, and you need to look at the controls which this company has implemented. And if that company is relying on artificial intelligence to do demand planning and understand that, okay, through this kind of intelligence, I would know that how much production I will be required to carry out to do in the next year. So whether those tools are in place, whether there are whether there are any weaknesses, the basic fundamentals remain same, but you need to have people who understand that IT. Even I am learning on this aspect. And when we were doing our FAFD course on forensic audit, we were also trying to learn how to, how to use the technology to our advantage. And this technology is going to play a very, very critical role in the coming period. The traditional practices are, there is no time now. Your startups and the youngsters and the way the companies are being run only on one iPad, and the whole company is being run from there. You need to have your IT tools and IT training and IT people around who will be able to give you the right kind of feedback.
Okay, sir. Thank you so much for sparing your valuable time. I extend my sincere thanks to all the faculties who have spared their precious time to enrich us with their knowledge. Thank you, sir. Thank you so much, and looking forward to have more knowledge from your side. Thank you, sir. Thank you so much.
Thank you very much.
Thank you so much, sir.